Rose. Welcome to our home buying seminar. We do this every Wednesday, 5 p.m. Pacific time, 8 p.m. Eastern time. I'm Bill Gross, a real estate broker in Los Angeles. We talk about how to buy a house, whether your first time home or trade up. I'm here with my colleague, Patricia Castillo.
Patricia Castillo, yes.
Patricia Castillo, otherwise known as Patricia Castillo.
You got it, Bill.
And
Gustavo Segura.
I'm going to try
Happy
that
New Year's,
one.
guys.
I'm gonna try that one.
Happy New Year.
Happy New Year, guys. It's been fun. And so here we are, and it's a new year. We're going to put the old year behind us. It was a good year for me. But 2023, here we are. So it's the year of a new home for some people, yes?
It
Yes.
is, yes. That's what we're here for. And yeah, it's been, this week has been started off busy for me already. I had a property showing earlier today in Roland Heights, beautiful $1 million home in a great area near a park. It was really nice, two-story home.
Nice.
And so these are first-time buyers, and they're looking to get into their first property. So it's it's that time right now where people are getting back to work from the holidays, and I know we've been at it, and we never really took any time off getting towards the holidays, but it's a busy time right now. So I'm looking forward to it and just seeing where this market's going to go this year. It's already starting off, pretty busy on our side.
Very nice. Very nice. And Gustavo, how's business on your end? How about the interest rates? We had the Fed meeting, a lot of drama before, up, down, and back to where we started from.
Yeah, as we mentioned, when the new year would come around, we're probably going to see a little bit better results on the rates, and it has. The last 2 days has been a lot better. So I think we have rates now that are getting lower into the sixes slowly on the wholesale side here of the business. I'm talking to people about guiding them through the process, about what it is to, be smart about the rate, what it is to buy a point, and you're paying for that, and how that affects their payments. So this week has been a lot of education.
Mm-hmm.
Excellent. Excellent. How about the drama with the interest rates? I know, the news talks about Fed's meeting, rates are up, rates are down, all because everybody's watching every single word from the Fed. At the end of the day, what happened?
Yeah, so I think, we have inflation reports coming out next week on the 12th. I think that will be a good indicator of where we're going. Inflation will come in for December. I think it is expected to be lower than previous December months. So that means inflation will come down. The job market still looks pretty strong. So I think that's something that they're keeping an eye in, because if they're keeping that market strong, then I think they're hesitant to keep pushing that inflation, button down. But it's going to be something that in the next week we're going to see exactly where we're going, and then of course the next 3 months as well.
Yeah, it's going to be interesting times, I think, any way you slice it.
Yeah, especially this first 3 months here. There's a lot of big data from last year that I think we're going to be taking over with new data, a new inflation report for December, for January, and so on. And I think that will keep inflation in the right direction, which is downward.
Nice.
Mm-hmm.
Nice. So what are buyers telling you? What are sellers telling you? What are you seeing out there in the marketplace?
So today I got an offer on one of my listing I have. And I think because buyers are seeing the market change right now, and the psychology of the buyers has changed, some of them are really stretching, the offer as far as things that they're concessions that they're asking for. This property that I have listed right now, it's a turnkey property. So it was completely remodeled, and they're not asking for credits towards any repairs. It's just towards the closing costs. So that's kind of the mindset right now is, anywhere between 2 to 3%. I've seen come across, that doesn't necessarily mean it's going to get accepted, but it does open that dialogue for the negotiations to happen as far as how much the seller is willing to credit, especially if there, whether there is an urgency to sell or there's not. They may not take the offer. So I think if you're representing a buyer, you really have to, you still have to strategize that offer, because you don't want to insult the seller by asking, sending in an offer, let's say 10,000 below the list price, and then you're still going to ask for another 10 or 15,000 in closing cost credits. So as far as the offers go, I think it's still really important right now to communicate with the listing agent. In this case, I received a text message saying, I sent you an offer, but a phone call is always really, really great to have a conversation, talk to the listing agent, and start building that rapport and communication so we can hopefully work together and get a deal closed.
Communication is so important. 100%. I'm in a similar situation. I have a buyer. We made an offer. The listing agent could never be on the phone, never could talk to him. He had a second assistant, a listing agent who knew nothing and could never say anything other than, okay, I'll pass it on. I'll get back to you. And so now we have substantial work. My buyer did a lot of inspections, and every time we got into it, it went a little further, and then went a little further. And now here we are when my buyer is saying, look, I'm buying it as is. And it was, rough property, granted. But that said, these are things that nobody would have known. And there are some things that, and she's a very sophisticated, she's actually an architect, and a very sophisticated buyer who knows, a lot about contracting, and was able to point out things like the exhaust going into the attic rather than out of the house. And things like just a number of foundation problems that she did inspections on. And I think the other agent is planning to just, say no because the seller doesn't want to, come down, and, hope the next buyer is more aggressive. But the problem with that is that you can't rely on the buyer not knowing what's going on with the property. You have to assume that they're going to disclose all the same information to the next buyer. And so I've made a point of giving all the reports to the listing agent, copying him, and he keeps not acknowledging that we sent these to him. And I had to write him a letter. So listen, I'm going to tell you that if we cancel this and you resell it, I'll reach out to the new buyer's agent, and I'm going to send them copies of my emails to you with all these reports, and make sure they know we disclosed all these things to you and how much it would cost to fix. So if your seller thinks if they're going to sell the house, that's their prerogative. You would disclose all this to a buyer and not sell it for less? Okay, good luck. But don't think you can just cheat the next buyer. Our system's set up where legally you shouldn't be able to get away with that. And I'm not gonna let that happen.
Right. Yeah, I mean, it's the ethical thing to do. It's the right thing to do. You have to share those reports with the next buyer, even if you're not able to come to an agreement with the existing buyer. So, I completely agree with you, Bill. It's something, that's our code of conduct. We have to be held to those standards where we are being fully transparent, disclosing all of the material facts, disclosing any repairs that we're made aware of, even, if our seller is sharing with us something about, a certain condition about the property. So we have to disclose all that information to the buyer.
Yeah, and I think that one of the things I try to explain to customers is that, and this is a perfect case, where I think there are real estate agents who work at smaller companies who, don't have as much to offer, and don't have as much to be sued over as our multi-billion-dollar company does. And we do play by the rules. We do require our agents to do the job properly. And some small companies, I don't think, know what the rules are. And I think this is a case where somebody who thinks, they can game the system. And I think one of the things that used to be distinct about the American system of business was that we follow laws, that we're a lawful country. And those laws make an even playing field for everybody to participate in. And if you're just cheating, then it's really like bullying people who can get away with the most. And that works in other countries that are less developed than America. Maybe you might, I'm not, want to talk about the politics of where we are, where we should be, but certainly compared to third world countries, we have more laws and more structure. And that's why our economy has been a good place to invest in. And typically, and this is a case where the real estate agent is newer to our country and kind of
Mhm.
gaming the system. But I don't think in the long run that's going to work. So my goal is to teach them it's not going to work on
Yeah,
behalf of my client.
yeah, absolutely. So I see we have Michael Barnard on the call. Welcome to the call, Michael.
Hey, everybody. Sorry about that. I'm trying to find the unmute button.
That's okay. So happy New Year to you. And how are you doing today?
Good. Just actually working on a few deals. I do hard money and private money lending. So oh, by the way, real quick, Bill, yesterday's call with Tony was amazing. That guy has just a ton of knowledge. That call was great yesterday.
Thank you.
But yeah, so yeah, just working on a few deals. It's pretty interesting in the hard money side right now. I know some of my investors are tightening up on their guidelines with some of the moves with the feds, but and I believe I saw that this morning was there was going to be a potential another bump, I guess, in the rates. But I mean, all in all, for the most part, hard money's we're starting to ramp up fairly quick. So a lot more people are starting to come over to us now because of the rates.
Nice.
Yeah, I did hear from another lender I was talking to the other day that even on some of the creative financing side, they're seeing the lenders that they're usually sending the business to and trying to get their borrowers accepted. Those guidelines are starting to get really tight.
Mm-hmm. Yeah, I'm noticing. I had a few investors that they were fine doing no appraisals on certain properties. Now they are requiring appraisals. So it's just nothing's crazy, I guess, per se, with the changes in the hard money guidelines. I just think that they're tightening up on some of the things they're looking for on the properties. But other than that, it's been really good. It's been an interesting ride the last year.
Yeah, absolutely. I mean, we're definitely in a skill-based market right now. And, you know, a lot of agents are, and other professionals as well, other vendors that I've used in the past, you know, they've left the market just because it just got really, you know, really tight for some people. And this is really a market where you really have to put your skills to work. And really, if, you know, whatever you were doing, you have to do that 10 times today. So as far as picking up the phone, making phone calls, reaching out to people, and really providing that service where you go above and beyond for them and really provide that education so that they know what to expect. And, you know, you really lay out the blueprint for them. So for us, of course, it's on the real estate side. For you guys, it's through collecting documentation, underwriting, knowing, you know, what their finances look like so that they can make an offer and be successful in closing the deal. At the end of the day, that's really what the clients want, is to close the deal.
Yeah, I mean, you brought up a really good point too, because I had a client that contacted me, and it was kind of an interesting deal. It was a property where it was owned by the father, and in a trust, he gave it to his kids, the son and daughter. And it just so happened the father had passed away, so it went to the son and daughter. Well, the son ended up passing away as well, like a few months later. So the daughter kind of had to take on this investment property. She didn't know much about real estate or anything in general, but she was referred over to me for hard money to do a rental loan on it. And what the first thing she said was, you know, thank you so much for the information. I appreciate it. And I guess what happened was she had found it was I guess it was on YouTube. And she found this other hard money guy that did a promo or whatever. And he beat my rate. But the thing behind it was, which is what you were just saying, is he beat my rate and then stopped returning phone calls to her, kind of like everything fell off the map. And she, you know, and I followed up with her a few days later and I said, hey, just checking in with you, see how everything's going. I know you have a lot on your plate with your family. And she's like, you know, Mike, I just want to be honest with you. I did kind of shop around and look for another vendor or another lender to see if I could get a better price. And I said, no, I totally understand. And as a consumer, you should. But she was like, you know, the fact that you keep calling me back and just asking how things are going and if I have any more questions, she's like, I'm just going to stay with you through the rest of this process. But it's crazy because, you know, I feel like it's not even back in the day, but it's the service nowadays is few and far between.
Mm-hmm.
Everyone's just trying to make the quick buck and then get out of the scenario where there's no relationship at all with customers anymore.
Yeah, absolutely. It's kind of like everyone's either fallen off the playing field, or you're in a digital world where everybody's just texting, emailing, but nobody's actually picking up the phone and having a real life conversation.
Right. Yeah, it's funny because I've been thanked more for picking up my phone and calling somebody back in the last few years than anything. It's interesting.
Yeah. We're all huge on communication, right, gentlemen?
Communication is
It
the
is.
foundation of any well-run organization.
Well, and a lot of the scenarios that happened a month or 2 months ago, or even 6 months ago, are changing. Just like you guys mentioned, we were talking about that before, Patricia, where a bank statement loan or a P&L loan, something that is self-employed that worked 3 months ago may not be anymore, and they're changing their guidelines because it's a risk. For the hard money lender, they're looking after the maybe improved value, right? What does that look like after they're going to do some repairs, if it's a fix and flip or anything like that, with property values changing, for that bank statement loan, they're also looking at, what is that going to look like if the economy changes? What is their income going to look like? They want more down payments. So it changes from month to month. That's part of why this industry it can be very exciting and also very tedious and hard at times, but the communication is where it comes in and really delivers.
Yeah, definitely have to be communicating with all players that are in the game so that the transparency is there and we're not wasting anybody's time, because everybody wants to help their client close the deal. But when you're fully transparent and you come across like, hey, look, this is what my buyer has. I had one agent call me and say, we have money for the down payment and the inspections, but little money after that. So if you can help us with closing costs, that would be amazing. Other than that, they're pretty solid buyers. So in that sense, it's very important to communicate what your expectations are, but also, where you're coming from and what you're bringing to the table.
Yeah, exactly. Because sometimes I feel like borrowers, as I'm talking to them in the beginning phase, they're hesitant to tell us that kind of information and tell me that. And when I feel that, I right away tell them, I said, look, I'm on your side. So if you tell me that you don't have money for like you said, for the closing costs or some of the down payment, I'm going to help you to get there. And some of the things I can do for closing costs, the down payment, that's a different story, but at least I can give you options.
Right. Yeah, absolutely. Oh, you're muted, Bill.
Oh, yeah.
Sorry, my phone was ringing. We like options. Options are good.
Yeah.
Michael, where do you do your hard money lending?
Right. Well, it's nationwide. I'm a broker, so I work with a few different investors, and they do nationwide. But I'm based out here in LA, so I was going to the Sizzler meetups every Wednesday.
No way.
Yeah.
Not the Sizzler
I used to
meetups.
go there every week.
Yeah. It's funny because I started going to those with a buddy of mine as a realtor. And at the time I was doing social media marketing for real estate companies, real estate agents, on ways for them to find clients through an automated process. And I've been in the mortgage industry for 20 something years, about 20 years, and got out of it for a while. I was with Bank of America and left. And then a buddy called me a year ago and he said, hey, have you ever heard of hard money lending? And I said, no, never heard of it. I mean, I've heard of it, but don't know much about it. And he said, you might want to jump into that because it's going to be, a really popular loan program moving forward, especially with some of the changes. A lot of investors are going to be looking for hard money lenders. So it was a pretty easy, shift to me. But yeah, I'm in LA. I'm out here in the Porter Ranch area. So, but it's been an interesting cycle. So I'm trying to start more networking events, network meetings to get face-to-face with people.
Oh, very nice. Well, have we met before?
You know what? I think I met you in person once or twice a long time ago. And that's how I started following your calls.
I used to go to that event every week.
Yeah, I could have sworn I met you a few times because I was there. Yeah, I was there pretty much every Wednesday as well.
And then, so for networking, you might want to go to next week on Thursday. There's a live event in Culver City area. Where do you live? What area? Porter Ranch, you said?
Porter Ranch, yeah, the one, yeah, the
So it
one.
might be a bit of a drive, but in Culver City, it's the biggest event I'm aware of. About 250 people show up, about 50 vendors.
Oh, wow.
There's some hard money lenders there. LAREIC.com.
Okay.
I would check it out for you.
Yeah, I'll definitely check it out. I'm just trying, like I said, I'm somewhat new to the hard money spectrum, so I'm trying to get out and meet with realtors and loan officers and kind of see what the struggles are with getting loans done and you know what's out there in the market. So I definitely want to stay up to speed with all the changes on the regular conventional side too.
Excellent.
Yeah, attending events really helps to get you in front of people, get to know more people, and then you learn when you're there because you're hearing other conversations, you're hearing situations and experiences that somebody just encountered that day or the day before. And so it helps you. So you're navigating your next deal. You might be encountering a similar situation and you'll remember the things that you learned by attending the last event. So it's fun. It's fun. It's inspiring, and it keeps you engaged and motivated. And as Bill says, the more you participate, the more you earn.
The more you help other people. That's how it works.
That's right. Yeah.
That's just the rule. That's just how it works. Yeah, the LAProbate event is a great event. Whether you're a professional, for sure you should go. And if you're in the area, it's a great place to show up and meet people. I'm actually the official podcaster of the event. Los Angeles County Real Estate Investor Association, or LAREIC.com. The event's the second Thursday of every month. So it's next week, Thursday, January 12th, 6:30 p.m. And there's a speaker, there'll be about 250 people there. That's the room. And then there's a vendors expo before that. It opens up around 5:30. And guest speaker on multifamily investing. I know Abbas, he's a colleague of mine, great guy, great friend. How to get started investing in multifamily property. So you're looking at investment property. And then I think, again, for Michael or other professionals, it's a great place to network and meet other professionals who are vendors or meet other customers as well. So if you do come, it's free event, free parking. And if you do get there, come by and say hi to me. And love to have you guys all show up.
Yeah, I appreciate that. Thank you.
Cool. What else we got going?
Well, this Friday is the Agents Helping Agents event.
Yeah.
So maybe you can post a link to that, Bill, and everybody's invited to attend. If you're in the real estate profession, you're welcome to attend. It's free. And something similar to the event that Bill just mentioned. It's a networking event. There's always, a lot of information that's shared. Again,
first Friday of the month in Diamond Bar at the Holiday Inn. It's for real estate professionals. So we have about 30, 40 realtors and some lenders and such there. Past speaker, Don Hobbs.
Mm-hmm.
This speaker is Luis Sequeira. He's a top agent in the area. It's not a recruiting event. It's all about skills and networking. Love to have you guys come. And that's free also. And that's at the Holiday Inn Diamond Bar. And I'll put the link in the chat box. And then if you reach out to me or Patricia or Gustavo, we'll have the information for you. I'd love to have you guys come.
Yeah, it's great.
Cool. There we go.
Okay, guys, what else we got going on?
Well, I think we were going to talk about, Gustavo, you mentioned something about a streamlined refi. So once you get into a property and the rates go down, because we've been talking about leveraging this market to get into a home of your choice today. And, we've talked about the interest rate buy down through the process and what that means. And once you're in the property and it's time to refinance and the rates have come down, then you can do what's called a streamline refinance, where it's much less of a process and it's a lot faster. And Gustavo, you're going to give us some information on that today.
Yeah, I think it's a great option that sometimes we don't talk a lot about, because we're talking about seller concessions, right, or seller credits. We talk about the 2-1 buy down, all these things to get you in, to be able to get that, that rate down from the 6%, get it lower, right? On FHA, the rates are under 5.5. So if you're coming in and you have less competition right now, you buy that home and in 6, 9, 12 months, we have a lower rate, then you have the option to do a streamline on a government loan. So that's USDA, VA, and FHA loan. And those streamlines are going to go a lot faster. They have less costs. You won't need an appraisal. You're going to have less documentation. Some of the lenders may not even, to use your full credit report. They'll take a look at your file, what they have, and they'll go off of that. So it's a lot of a faster process for them. And now you can get that rate down even better. And so it's really a win-win if you can buy now where you can get some of those seller concessions. And then later on, you take the streamline process and then can refinance. Now, it's not going to be, we're not going to have this underwater situation, but even if a house was underwater, you can still do a streamline refinance. So there's a lot of flexibility within those streamlines.
Mm-hmm. Yeah, because they'll do just a quick desktop appraisal, right?
Yeah.
Where they're sending a physical appraiser out to your property. They have the property from the past, but they're also using the online analytics to show the values and the current sales. So because they just closed on your loan recently, which would be in the last, maybe 2 years, they don't need to send a physical appraiser out there, which
Correct.
is part of the streamlined process because it gets you there much faster.
Yeah. The other thing too is, you're paying this upfront mortgage insurance premium with an FHA loan. So depending on when you refinance, you're going to get this credit off of that. So you're not, repaying that again. So if you're refinancing, 9 months or 12 months later, we have a calculation that we use in order to say how much of a credit you're still going to be getting for what you just paid 9 months ago. So there's a lot of flexibility within the streamline in order to help lower the rate, not overcharge the consumer, because again, it's a government loan program. So they're not looking to, keep making money off of you. That what they're looking is to be able to help the consumer and get into a better rate because the market is turning and they can take advantage of that situation. So there's flexibility as well within the upfront mortgage insurance cost. Typically, every FHA loan will always have an upfront mortgage insurance cost, but when you're doing the streamline, there's going to be a credit that you're going to be able to use, so you don't have to pay that all over again.
Yeah, and I think the other, the other benefit of the streamline process is the lenders, since they're not, getting a lot of the business right now on refinances like they were in the past few years when the rates were down, lenders were busy with all of their refis coming through their desk. So now this is a great time for them to keep your business, right? So they want to help the consumer with the streamlined process, hold on to that customer, hold on to that borrower so that they can, even if they're giving you a better rate, they're still retaining you as a customer. So that's like the customer retention side of it as well. So they're not losing this customer to another lender that's giving them a better rate. They're still holding on to that business. They're able to service the customer by giving them that benefit of the streamline refinance. And so it's a win-win situation. The banks keep the customer and the customer is happy with the lower rate.
Yeah. So there's a lot of great flexibility within it. So if you're buying now because there's less competition, 9 months, 12 months, rates are lower, you can take advantage of the streamline and then be able to be in an even better situation.
Yeah, absolutely.
Very good. Well, and all that
And
comes down to
one more thing real quick. With FHA, since we're talking about government loans, the FICO scores and eligibilities are going to be a lot lower. So I just got reminded of this week. I was talking to someone that was below 600 credit score. They were thinking they weren't going to be able to buy, but they decided to call in. And if once you go below 580, you do need more down payment. You need a 10% down payment on an FHA loan, maybe some reserves. So you do need a little bit more, but the option is still there. So, just because you may think that you have a lower credit score than 620 or 640 and, home ownership is not a reality, pick up the phone, ask someone, give me a call, because there's options and there's ways to get there.
Yeah, good stuff. There's also a lot of reduced paperwork and faster loan processing when you're doing the streamline refinance.
Mm-hmm.
Yeah,
Well,
so
again,
do you have anything to add,
important
Bill?
to keep your credit cleaned up, important to plan ahead, and important to take advantage of the opportunities. That doesn't mean you should buy a house you can't afford. just because you're going to refinance it means if you can afford it now, you're going to only have opportunities to lower your payment over time. That's part of the benefit of home ownership. So fantastic. Thank you for explaining all that.
Yeah.
I got to jump off. We're at the 30-minute mark, and I have my next appointment's my wife.
Oh, you better be on time.
She's here. I came in, so that's why I turned off my camera for a minute.
Yeah.
So I want to see you guys have her young at me and all that. Anyhow, let's wrap up. Last word, Gustavo. New year. What's your message to your customers? Give us one quick message.
Yeah, I think home ownership is still the right way to go. So I think we just gotta, education will be key, and everybody will be in a different situation. But there's definitely a plan for each person, and I'm more than happy to help them through that.
Fantastic. And Gustavo, someone get a hold of you? How do they get a hold of you?
Directly at 714-334-4563.
Fantastic. And one more time, the number is
714.
This is your Sendero Home
Yeah.
Loans is your company, right?
SenderoHomeLoans.com, and it's 714-334-4563.
And all that was me stalling because I meant to get up your website, and
Oh, gotcha.
I was slowing this trigger today, but I love your picture right there.
There you go.
There's your phone number.
There it is.
Purchase or refinance, either way, get in on the job. Very good.
Thank you.
But thank you so much. And Patricia Castillo.
Yeah.
Or Patricia Castillo to us gringos. How should somebody get a hold of you if they want to talk to you about buying a house?
Absolutely. So my phone number is the best way to reach me is my cell number, and I'm at 323-365-9909. And I'm so happy that everybody is here watching. We're excited to service everybody, and just give us a call.
And if they want to reach you on the IG, since you're all that and a bag of chips.
All that. Yes. So my IG handle is basically my first and last name. So Patricia Castillo, Sales LA at that's it. I was giving you my email address, which is the same.
Okay, so it's Patricia Castillo, Sales LA.
Sales LA.
Or if you're gringo, you can put Patricia Castillo, Sales
Yeah,
LA.
Castillo, Sales LA.
Fantastic. Thank you so much. Everybody, thank you for the call today.
Thank
Appreciate you. Love you.
Yeah.
Here to help you. Make 2023 your dream year. We're here to make it happen. Thank you so much.
Yep, let's get it.
Thank you, guys.
Yes, guys. Bye-bye.
Thank you.